Welcome to America's Policy Podcast. I am your host, Cassandra Alessio, and this is episode 21. I want to go over today episode regarding property taxes, as this is kind of making headlines right now and is a huge problem for people purchasing a home. And also it's a huge problem in a lot of states because it's at a disadvantage for first-time home buyers and even people that are trying to downsize or even retire. So I just want to share my screen with you because I just want to go over a bill from Florida. So I am not from Florida. I don't know the politics behind the bill. I'm sure there is. And I'm not exactly sure what the issues are, as I'm not a Florida resident. But what's intriguing is they have a bill, which I just pulled up the screen. You should be able to see it, hopefully. It's SB 852, Study on the Elimination of Property Taxes. And if you look about it, look to read the summary. It's a study on the elimination of property taxes, requiring the Office of Economic and Demographic Research to conduct a specified study, requiring the office to submit a report to the legislature by a specified date, etc. So what's interesting about this is that they want to study the idea of eliminating property taxes. Now I'm going to see if I can pull up, hopefully, let me see if I can pull up the webpage. Hopefully I could pull up the actual bill, I think. Let's see. Yes, you should be able to see it now. So I'm not going to go line item by line item as this is actually pretty short, I think. Okay, so an act relating to a study of the elimination of property taxes requiring the Office of Economic, and I already read this. Okay, so Section 1, the Office of Economic and Demographic Research shall conduct a study to establish a framework to eliminate property taxes under Chapters 192 through 196 Florida statutes and to replace property tax revenues through budget reduction, sales-based consumption taxes, and locally determined consumption taxes authorized by the legislature. Let's see. And then it tells you what the study must include, and then it just kind of lists it. Now, what's interesting about this idea is that we must know that property taxes are a huge issue because it wouldn't be making headlines. Now, again, I don't know the reason for this, but in New Jersey, it's a huge, huge problem. And it's an issue for a lot of people. You have two, I think, demographics that it's affecting the majority, and that's the first-time home buyers and the retirees. So the idea is, if you think about it, like most people take out a 30-year mortgage. Now, do they have the option for 15 years? Yes. Can you pay off your mortgage a lot faster? Yes. But the reality is the majority of people are paying it off in 30 years. So I just want to kind of show you, let me just show you a document. So I'm just going to pull up a Word document just to kind of explain this a little bit better. So property taxes. Okay. So depending on what state you live in, you might be purchasing a house at $200,000. I don't think a lot of states have that, but they're still out there. You do still see a lot of houses for $200,000 or up to $900,000. If you're in a high cost state like I am, you can go up to probably maybe at least 1.5, 2 million maybe. Or if you're in California, same thing. And then you have some states now which are struggling with insurance. Insurance is a huge, huge, huge problem. Also because of flooding, fires, etc. Or the lack of money management. It can go either way. So if you have 30-year mortgage, we're just going to do a 30-year average because most people pick the 30-year option. Most people are not paying it off in 15 years or less. Not that it's saying it doesn't happen, but most people are doing a 30 years mortgage. Now, if you purchase, just to say around 35 years old, I'm just going to say the average. Now, some states maybe some states you're at 30, some states you're at 25, some states you're at 40, but we're just going to do 35 years old. That means you're not paying off your mortgage. And that's if you're consistent, you have no issues, you don't have to extend your mortgage. there's no problems. You're not looking until paying off your mortgage till at least 65 years old. So 65 years old. I just want to like reiterate that because you're not young enough where you're going to have a lot of years ahead to now take your source of money and put it into something else. So for example, the idea is after you pay off your mortgage, so after mortgage, you have to look at your expenses. And I'm going to put property taxes as one of them, healthcare, because healthcare is just astronomical in most places. And not only that, it's job security. Because the older you get, this tends to be, sometimes it's a little bit harder, especially when you have to change careers, to be able to find a job. Maybe the job you had when you were 35 years old is not going to be the same job you have at 55 or 65. Maybe you're making more, maybe you're making less. But when you change careers and the older you get, it becomes a little bit harder in the sense that the technology changes, right? Technology is changing, software is changing. You have to learn all these things. And the older you are too, you require more of an income compared to somebody that's younger and might be able to take less of an income because they don't have these huge expenses. So the idea is the only way we can kind of adjust the ability to make payments is by property taxes. Because a lot of times people, not only can they not afford a home, so not afford a home because of property taxes. I'm not going to argue so much with interest rates. Yes, it does make a difference because a 5% interest and a 7% or 4%, 8%, yes, makes a difference. But the fact is you could always refinance. And those interest rates are for 30 years, right? So 30 years. Your property taxes are for life, right? So this is a life statement. This is for life while you live in that property. And they always go up, right? Always go up. They always go up. Yes, technically they're supposed to work on stabilizing and going down, but that usually most of the time is not the case. Interest rates, as long as it's fixed, you're going to be fixed for 30 years. So it's actually very different when we're comparing property taxes and interest rates. Now, the idea of what Florida is thinking is to eliminate it, to study it. Now, this is how legislation works. We put studies out all the time. Every state does, every federal government, even the federal government does this because it's the idea of to understand and educate. Now, I think this is important even when it comes to any type of bill, because how are legislators supposed to write a bill if they're not educated in it? You can't be educated in everything. So they need to hear from constituents. They need to hear from homeowners and property owners to determine, is this a problem? So to me, I'm not really personally an advocate for high property taxes. I am anti high property taxes, and here's why. Do I think you need money? Obviously, you need the government to run, you need programs, you need your local government, you need your schools, yes. But the problem is, property taxes can make or break you. It can make or break a real estate deal, for especially for first time home buyers, or even if you're retiring. Because you always have to, even if you pay off your mortgage, right? You're 65 years old, right? So 65 years old and you're just starting out. Because now you're okay. All right, now I don't have to I have no principal pay. I have no mortgage payment, right? There's no mortgage payment at 65 years old, but now you have property taxes. Now property taxes could be, depending on your, especially in the high cost state, at least 1 to maybe 2K a month, right? And that keeps on going up. I mean, New Jersey's an example. New Jersey, I'm not exactly sure what they're doing with all this money, to be honest. But New Jersey, you have California. That's another one. And I think California has something different because they have a special laws in regard to this. But just in general for property taxes and the high cost states, Massachusetts, New York, the list can go on and on. And I would say that this used to be just a small group of states, right? This used to be where if you only lived, I guess it's towards the East Coast and the West Coast, the far ends, that those taxes would be a lot higher. But the reality is you're seeing it more and more in other states. And you're seeing it also a trend of insurance, right? So insurance is becoming an issue where you might not be able to, and I see it in, I think, Florida, you might even see it in California. They're just slowly starting to make news about how insurance companies don't want to insure certain properties in areas that have a high chance of being hit with, whether it's a fire or if it's flooding, or I think now they in areas where there's a lot of hail or issues like that. And I think what the problem is insurance is this whole separate industry, right? That's more private. That's a private sector industry. Although there is more the discussion of how now the public has to, or the government has to make up the difference, but that's totally something different. I think property taxes are the one thing that we should go after, because the idea is, if you think about it, people that want to buy their first home might not be able to afford the property taxes, and the people that want to retire are not going to be able to afford the property taxes. And every state's different, right? So I can't say what works for one state will work for the other. But when you having housing for, let's give an example. Now, everyone knows that the way that the economy has been going the last, I don't know, 10, 15 years, and it's becoming a huge gap between wealthy and those impoverished. So let's just do an example. You have to pay, we'll do just an average, $1,000 a month in property taxes, right? And this is a monthly fee, $1,000 monthly property taxes. Okay, now we're going to say you have a very low mortgage. I'm going to say, I'll even go lower. I'll even say you really, well, I can't go too low because I want to do like an average. Okay, so $2,000 a month mortgage payment. Or, you know what? I'll put $1,500. I'll try to be very conservative just to show you how bad it actually really is. Okay. $1,000 a month monthly property taxes, $1,500 a month monthly mortgage payment. Right? Now you have, I'm just going to say you have a small house. Maybe you're not using a lot of electricity, water, gas. We're just going to put 400 gas, water, electricity. We'll put an extra 200 because some towns charge for sewer or water line in, water line out, depending on where you live. So actually, you know what? We'll just make this, an even. We'll add sewer here and just say 400. Now, I'm just being conservative with all these numbers. And again, it depends what your town is and what state you're in. I'm just kind of showing towards the higher cost states. Then you have, for example, say you have a car payment. I'm going to be conservative, put 400 again. Then you have, let's see, you might have insurance, car insurance. Car insurance is quite expensive in high cost states. I'm just going to say 200 car insurance. Now these are all monthly, right? So I just want to make sure this is all monthly. And the reason why I want to break this down to you, because this explains how the issue of the middle class disappearing, and this is the reason why. And I think, and I'm not really an advocate for higher property taxes. I think anytime you take more taxes does not necessarily mean you're going to get the amount back in government assistance. So I'm more of keeping the taxes as low as possible. So let's see, 1,000, again, everyone's opinion is different. So what I would say might differ from someone else's, but I want just to explain that how this is why the middle class is disappearing. And this is what we really need to fixate on. And I'm kind of, now I don't know what the reasoning behind Florida, but it's something I think every state should look into. Why are we paying all this money a month? Now, let's see. So we have $200 car insurance. Now let's look at, I don't know, car insurance. So let's just say $400 a month in food, right? And this is just basic necessities. And in a lot of states, you do need a car. So even if your car payment's $300 or maybe $500 or $250 or $600, it just depends on what you can get. And cars are getting more and more expensive, and it's becoming harder and harder, even used cars. So even people will say, oh, get a used car. That necessarily doesn't really work. And sometimes it actually costs only a couple thousand less. So $400 food. Now, let's say you're putting, I don't know, $200 a month in gas. It's probably more, but we'll just do 200. And then you have just put $100 phone bill. And now, of course, you have miscellaneous and medical, because medical, you could spend, even just going to the doctors, if you go to urgent care, or even if you go to a primary doctor, you have one issue, you could rack up $50 to $200 in just one visit. That's if you're insured. So I just want to put a basic. So listen, 1,000. So this is just property taxes, mortgage payment, gas, water, electricity, sewer, car payment, car insurance, food, gas, phone bill. Now, you're probably going to have other expenses, right? So let's move this down to the second page. I can just show you. So other expenses, right? So other expenses might be medical. Maybe you have credit card debt. Oh, I'm going to put this one because I think this is really important. I think most people, especially I would say maybe 40 and under, 45 and under, I'm going to say maybe put a $600 student loan payment, because that's the reality. And that's probably minimum. I'm going to say it can go maybe you have a 400 to, some people pay 1,200 a month. So I'm just going to do 600, right? Other expenses, medical, credit card debt, and I would say miscellaneous money. We're all going to want to have be able to have to buy, I don't know. I'm going to put miscellaneous here because I think it's important that you put $200. Like, this is not grocery food sense, but like paper towels, or, pet food, or toothpaste, like household items, right? We're just going to put household items. I'll take all this out, household items. But this is necessary. You can't go without household items. And 200 is being actually very conservative. So if you're looking, now I want to see if I can share my calculator. I don't think I'm sharing it. Maybe, I don't know. Okay, so let's see. I'm going to take my calculator and I am going to add everything up. And the reason why I'm doing this is because I want to explain how property taxes really can make or break you. And it's important, if we're doing something wrong as a state government and we have an opportunity to fix it, why don't we? And to be honest, I think a lot of times we have these options and we don't want to fix it, whether it's because of political reasons. Maybe we're up for a re-election, or maybe it's gonna be geared towards one demographic and you don't want to upset them, or if you are struggling with deciding who deserves funds and who doesn't, or putting a separation. Of course, that's a lot of issues now, especially in America, where we're kind of very divided, and we don't really need to be. But here we are. So I'm just gonna. Did it even out to 5,000? Really? Okay. So I did that really quick. So hopefully it actually added up correctly. But let's see, 2,000. 2,500, 2,900, 33, 34, 35, 39, 41, 42, 43, 44. Yep, 5,000. Okay. So 5,000 total. Now that's not without other expenses. So other expenses, let's just throw into another $200. It's probably way more. So we're going to do 5,000 total, 5,200. Grand total, right? Now, 5,200 grand total is how much you need for basic living. This does not include your retirement account, right? So it's not including retirement. It's not including family vacations, or it's not including car repairs or emergencies. So all this, you're looking at, the real probably total is about 6,200, right? But that might not be every month. So I'm just going to deal with the 5,200. And that's being very, very, very conservative. for a medium to higher cost state. So $5,200. So that means after taxes, so we're talking about income federal taxes. Everyone's doing their taxes now. So after taxes, so 5,200 times 12 is 62,400. Okay, so this number should be a little shocking. And the reason why is because after taxes, this is how much you have to make, right? That means before, now I don't know what maybe you need to make, I don't know what you need to make before. I guess it just depends on your salary, if you're an independent contractor, if you're a salaried employee, or you're an hourly, what your tax bracket is, etc. But this is what you need to make after taxes to afford basic. Now, most people are not living on basic. They're not, because they're not including their credit card debt, their medical debt, or any kind of their retirement accounts, or car repairs, or emergency vet appointments, or maybe you're sick this month and you have to spend $150 at the pharmacy. So you're really looking at, maybe, let's make this a $6,500, because we all have emergencies. Maybe your tire broke. Maybe you need to get new brakes, and all these expenses. There's always something every month. No matter how much you plan, there's always something every month. So let's just do 6,500 times 12. And you're looking at $78,000. So after taxes. And this is being conservative. This is not you going out every night, every weekend. This is not you spending frivolously. This is being conservative. After taxes, $78,000. Now, again, this might be different for a state that's a lower cost state, but I'm just showing you for an example for more of the higher cost states or the middle cost states. That means before taxes, you're going to have to make quite a bit of money, right? So this is important because most people are not making this money before taxes, let alone after taxes. So what is it? I'm just going to look it up. I want to stop sharing for a second because I want to kind of look at the average salaries. So let's see. Average salary, New Jersey. Average, and that's just basic Google searches. This is not me taking the time to actually really look into it, because it takes a lot of time, and I'm just doing this live right now. So average salary is about $67,000. Okay, let's do New York. Average salary in New York, $110 they're showing. Oh wait, no, that's not it. The average medium salary is about $73. Hold on. I'm looking. Okay, this one's 2025. So actually, they're saying average salary $51,000 for New York as the average. Now, again, you have to look at a bunch of research. This is just me quickly just getting an idea. Or maybe let's look at Florida. This will be interesting. What about Florida? Now, every state's demographic is very different. So average salary $49,000. Let's see what another website says. $58,000. So the salaries are a little bit different depending on what website. This one is there's a Florida annual average wage by county. Oh, that's a little bit different. But I see a lot of like 40,000, 47,000, 49,000, 46, 51. So maybe that's about average. Okay, so this is a huge discrepancy. So let me bring back Word document. Okay. So this is what the problem is. This is a huge problem. Now, wait a minute. Now, what if we take back that $12,000? So what happens if we credit $12,000? So we credit $12,000 for those property taxes. So you're looking at maybe 52,400 or oh wait, that's 10,000, sorry. So 62 would be 50,000. 50,400, right? If we credit 12,000. So 50 plus 12, 62.4, which brings you this first number. Or if we credit 12,000 to the 78, and that would bring us to 60. Oh, damn. The 66,000. Okay, so this will be 66 will bring you to the 78, right? So we want to be able to see what is the difference if we credit for the property taxes, right? Property taxes. And that's the $12,000. And I'm doing everything very quickly, so I do apologize if the numbers are a little off. Okay, so this is what I'm showing you, like what a huge difference. Now you can now it's still, you're still having a problem. We're still having a deficit. This is not going to be the whole solve all, because the taxes, they're going to try to, my guess is try to make up the taxes somewhere else. I don't know. I guess we're going to find out, but it is a very interesting topic. But if we could somehow, the states, eliminate it with not raising all the taxes too much, so where you're not going to actually be back to these numbers with a different type of tax, because that's always the trick, right? You got to watch when they say, okay, we're going to cut this, but then we're going to add this. So if we can make it work and we could actually save some money, then we're still in the red. Most middle class people are probably still going to be in the red, but it's getting better. And not only that, it's giving it an entrance to home buyers, right? We're supposed to be pro middle class, and then it's giving an option for retirees too, because it's going to be very difficult to afford a lot of these property taxes in retirement, especially if you're on a fixed income. So I think this is very interesting, this bill, and hopefully we'll be able to follow this and kind of see, and then maybe other states can follow through. But I think also they have to really look into what is inclusive of the property taxes, and then maybe go after those budgets. So I think that's it for today. Yes. So I look forward to talking to you next week. If you have any questions or comments, comment below. Contact me, America's Policy